Well, good afternoon, and thank you all for being here today. My name is Vanessa Burke, and I am here with Jack Regan from UHY. I know you're all just getting back from your break. I know this is the last session of the day, so we do hope to keep this exciting, relevant, and informative topic for you, especially on a Friday. We are going to be covering sub-recipient monitoring throughout the grant lifecycle and under the CARES Act. I will be presenting the topic, and both Jack and I are available in the Q&A for any questions that may come up. I also want to thank the Association of Government Accountants as well as the Phoenix chapter for inviting us to be a part of your annual conference this year. We really want to thank you for that opportunity. So a couple housekeeping notes. One, welcome. All attendees that are on the call today have been muted upon entry into the presentation. This webinar is pre-recorded and the speakers are available for questions in the chat. You can go ahead and submit a question there. You just select your Q&A on your toolbar and type that in. We will try to monitor it and get to all those questions as we get through each of the sections. And if for some reason we don't get to you, our contact information is available at the end. For CPE credit, just be aware that there are going to be the standard random letters are going to appear. They're not the same as other sessions, but those will appear throughout the presentation. You should be continuing to jot those down on a notepad, and those will be reported at the end for purposes of granting CPE credit. As a hint, there are a total of 8 letters. And then last, we do appreciate your feedback on the survey that is at the end in order to try to make these sessions better in the future. So with that, I'm Vanessa Burke. I'm an audit partner with the firm of the Poon Group. My experience is 30 years in serving all levels of government, federal, state, and local, as well as not-for-profit. I've really focused in that area. Over half my career spent in Big Four with other very large firms, Moss Adams and Grant Thornton. Poon Group is a firm of approximately 5 offices, 3 in California, 1 here in Arizona, Phoenix, and 1 in Nevada. We are a growing firm, and one of the areas we are focusing in is on sub-recipient monitoring. So we do a plethora of single audits. My personal experience on large single audit clients has been University of California as a research organization, University of the Pacific, and then many municipalities throughout California, Arizona, and not-for-profit research orgs. I am the federal sub-recipient monitor for a top 10 city in the country. I've also been a grant administrator for FEMA for a municipality I work for, as well as programmatic audits for for-profit research organizations. Jack has been an audit partner with UHY for several years, and also we work together at Grant Thornton, and he also has Big Four experience as a partner with KPMG and other large national firms like Clifton Larson Allen. Again, we've got comparable experience, and so I think we'll bring you some great material here today. Jack is also the federal sub-recipient monitor for Health and Human Services Administration for Family and Children's Services. So our agenda today in covering sub-recipient monitoring is to go through a little brief background on the uniform guidance and how it came about, talk about the CARES Act and other COVID relief funds, talk about sub-recipient monitoring specifically, testing procedures. We're going to go through some common testing procedures, reporting results of testing, any common issues we found with cost charged to grants, and then we'll take questions at the end if we can answer them through the chat. So I'm going to kick this right off into background on uniform guidance. Really, the timeline for passage of uniform guidance started many, many years ago. And back in the early days, before many of us were out of school, in 1970, they had OMB 889, which was really the Federal Domestic Assistance Program information. After about 10, 15 years, things kind of heated up in the federal granting. And so in essentially 1984, the federal government came out with OMB A-128, and that was the official Single Audit Act of 1984. At that point in time, it required audits of state and local government that had expended greater than $100,000 in federal funds. And that was later amended and added to that in 1988 was the OMB A-102 circular, which was a common rule for state and local governments. And that was essentially the common rule administrative requirements. And then in 1990, the Single Audit Act of A-133 was issued under OMB A-133. That was the audits of state and local governments and incorporated not-for-profit audits. So that added higher ed and not-for-profit to it. And at that point in time, they raised the threshold to $300,000 or more in federal expenditures required a single audit to be done. In 1993, OMB A-110 was issued, and that applied to costing for universities as well as for not-for-profits. And in 1995, OMB A-87 kicked in, and that provided cost principles for state and local government. And in 1996, the 2003 Single Audit Act was amended. At that point in time, we increased the threshold to $500,000 in federal awards expended required a single audit, changed the definition of reportable condition to significant deficiency, and added the determination of cognizant agents in there. So again, this 20-year period essentially ended up in 2013. They issued basically Title II grants and agreements under the Code of Federal Regulations, Part 200, which established the uniform administrative requirements, cost principles, and audit requirements for federal awards for federal agencies. And then effective in 2014, effective December 26, 2014, those uniform administrative requirements or uniform guidance, as we'll call that for the rest of the presentation, was established for non-federal entities. So essentially you can see over a 30-year period, which really has been the span of mine and Jack's career, we can see quite a bit of changes in those requirements. Next slide. All right, sorry about that. So really the whole purpose of this project, it was a 3-year collaborative effort across all federal agencies to essentially streamline, reduce duplicative and conflicting guidance between not only the cost circulars, the administrative requirements, but the audit requirements for all agencies. Between the olden days, we were 30 years ago trying to decipher all of this between the different ones. We had several that applied to universities, several that applied to nonprofits, and then others that applied to government. So ultimately it's now accumulated in just one code of federal regulations called Uniform Guidance. So really the objectives of the uniform guidance were also to bring about certain changes where we're now focusing on performance as opposed to just compliance, focusing on performance over compliance for accountability as opposed to just compliance, also encouraging efficient use of IT and other shared services, providing for consistent and transparent treatment of costs within those circulars, and limiting allowable costs to make the best use of federal resources and award dollars. Last, setting standard business processes using data definitions, which is in the early parts of the chapters, and then strengthening oversight and internal control. And last, targeting audit requirements on risk of waste, fraud, and abuse. So you can see the objectives of the uniform guidance are organized in some parts. Subpart A provides those standard definitions and data dictionary general provisions, pre-federal award requirements, and contents of federal awards. We won't be focusing on that. We're really focusing more on subparts D, E, and F, which is post-federal award requirements in this session, cost principles, as well as audit requirements. Attached in the appendix to CFR Part 200 is 11 appendices. You can see the first two apply to your notice of funding opportunities, as well as contracting provisions for federal awards. And then the rest are really focused on cost principles. I'm not going to go through Appendix 10 or 11, which is the data collection form or compliance. And I won't be going through these in detail, but this is just for you for reference purposes. So why monitor federal grants? That's the main topic of today. Essentially in those 2 CFR Part 200.331, it's a requirement. You as a pass-through entity, if you are a pass-through entity, are required to evaluate each of your subrecipients' risk of non-compliance with federal statutes and regulations and the terms of the federal awards, the sub-awards that you've given to them. And you're required to determine the appropriate monitoring level based on your risk assessment. Last, you have a requirement to verify that subrecipients are audited under the single audit requirements in subpart F of the uniform guidance. That's requiring that if they expend greater than $750,000 in federal awards in any one year, that they're going to have a single audit performed. Last, failure to adequately monitor compliance of subrecipients could result in reputational damage, not only to the subrecipient, but to you as the granting organization, and could potentially jeopardize current and future grant funding. It is our opportunity in monitoring to combat fraud, waste, and abuse in federal programs. And last, as stewards of federal funds, we need to ensure that those grant dollars are used for their intended purpose, and that the recipients must account for costs and justify expenditures. In the absence of those, and if there's other things going on, federal grant dollars were used for unjust enrichment, personal gain, or other than their intended use, that is considered a form of theft and is subject to criminal and civil prosecution under the laws of the United States. So I'm going to dive right into the CARES Act and COVID. I'm going to talk about the U.S.'s response fiscally to COVID-19, where the money has gone in the U.S., and then we'll focus a little bit on Arizona. So we'll go through each of these phases. It probably isn't everything, but it's really, I've tried to compile the largest funding. It will not cover state funding in this presentation, but will be focused on federal policy. So in March of 2020, at the start of coronavirus, we had 2 bills that were passed in that first month. Actually, we had 3. I'll throw them all up here. We had $8.3 billion was the Coronavirus Preparedness and Response Supplemental Appropriation Act. That was nicknamed Phase 1. It was designed to fund research for a vaccine, give money to state and local governments to fight the spread of the virus, and allocate money to help with efforts to stop the spread of the virus as well. The $3.4 billion of Families First Coronavirus Response Act, or the FFCFA, was in March of 18, just a few days after that. And it allocated $3.4 billion in relief and included provisions to provide money to families for free school lunch, who rely on free school lunch in light of school closure, mandating companies with fewer than 500 to provide paid sick leave for those with COVID, as well as tax credit to help cover those costs, and provided nearly $1 billion in additional unemployment insurance for states, as well as loans to states to fund their unemployment insurance programs, and provided funding and cost waivers to make COVID-19 testing free for all. And then separately, on March 18th in 2020, the Federal Housing Administration and Federal Housing Finance Authority, or financing agency, implemented foreclosure and eviction moratoriums for single-family home whose mortgages were insured by FHA, Fannie Mae, or Freddie Mac, which has since been extended. And then you can see over on the right-hand column is the largest of those bills, which is 2.3 trillion in funding. And that's really what we call the CARES Act. But for purposes of the rest of this funding, we're going to just refer to it all as CARES Act, even though it may fall under separate names like the FFCFA. So this was the phase 3 funding, and the key parts of this was it established the Coronavirus Relief Fund, or the CRF fund, which provided $150 billion in direct federal fiscal support to governments and states, territory, and tribal areas to cover expenditures incurred due to the public health emergency. The bulk of that funding assistance was allocated to the states, but local governments with populations of 500,000 or more were also eligible to receive federal financial assistance. And the direct assistance to that local government reduced the allocation made to the state. The $150 billion included in that CRF was allocated as follows: $139 billion to the 50 states. Each minimum state received $1.25 billion, $8 billion to tribal areas, and $3 billion to territories in the U.S. such as Puerto Rico, District of Columbia, etc. So next up was another package that came in the following month in April. Again, this was still under Trump, was phase 3.4, and that was nicknamed 3.4. And that was really just used to replenish the PPP and the EIDL programs, as well as to provide funding to hospitals and for COVID-19 testing. The Paycheck Protection Program Flexibility Act of 2020 was established in June of 2020, shortly thereafter. And this program allowed, among other things, it extended the time period for businesses to spend the PPP loan and allow loan forgiveness recipients to continue deferring payment of their employer's share of Social Security tax. On July 4th, Trump signed another bill which extended the availability of loans under the PPP through August 8th of 2020. You all may remember that. Then next was a $50 billion federal emergency declaration. That's not next, it happened up in the March timeframe. And that was just additional funding for FEMA to provide aid to states, cities, and territories. So under the FEMA Act and declaring the federal emergency, that happened. And in addition, $44 billion also came out from FEMA by executive order in August 10th, and that was to essentially create the Lost Wages Assistance Program. So you may see some of that funding coming through. And then finally, in December, post-election, but before the inauguration, was $900 billion was passed for the Coronavirus Relief and Supplemental Appropriations Act. That was actually attached to an omnibus budget bill. And then finally, one last 1.9 trillion is the what we call Stimulus and Relief Package 5, the American Rescue Plan. This was signed, and the ARP was signed March 11th of 2021 by Joe Biden as president, implementing that package and relief proposals. And so some facets of that included raising minimum wage to $15 an hour. That was in the original bill, but was excluded in order to pass the plan using the Budget Reconciliation Act. Roughly $350 billion of that funding has been earmarked to go to state and local government. And the key points of that plan as it was passed are direct cash payments of $1,400 to individuals earning less than $75,000 a year, increasing some tax credits, and amongst a whole bunch of other things. $130 billion is going to funding for K-12 schools, $55.5 billion for Center for Disease Control and Prevention to administer and distribute vaccines, $39 billion to higher ed, $30 billion to public transit, $25 billion to emergency rental assistance, $25 billion for the Small Business Administration, to grants for restaurants and other food, $40 billion in childcare, $15 billion to support airline industry workers, and $7.25 billion in additional PPP funding. And then last, a provision treating any student loan forgiveness passed between December and January as non-taxable income. So a lot has been going on federally. And if we want to look on the next slide, we can see where has the money gone by CFDA. I've given you a link at the bottom of this chart, and it'll be in your additional resources at the end. But you can see the pandemic response funding by CFDA number, which are federal transit formula grants, disaster supplemental nutrition, disaster assistance loans, I can't say epidemiology and laboratory capacity for infectious disease, we'll call it ELC, coronavirus relief, education stabilization, PRF and CRF, which are the common terms, as well as PPP. So you can see next slide shows dollars spent in those programs. So under the disaster grants that had not been spent, this is real-time data, has not been spent because they're still doing the allocations and finalizing those. But those are yet to be spent. And there was a negative adjustment on the supplemental nutrition of about $1 million. Next slide, where has the money gone in Arizona? So for Arizona, the allocation or appropriation was $20.3 billion is what has been obligated federally. So far to date, we can see $15.8 billion has been already spent. And I'll back that slide up a little bit. You can see some of these programs like the CRF and the PRF are completely expended. But some of the aviation workers loan, middle of the slide there, has not been fully spent. But really, for purposes of spending, that money has been given out. So we'll see a very small amount hasn't been spent in Arizona so far. Of that, you can see 43.7% went to state government, 20.3% went to small business, 11.1% went to city and towns, 8.7% went to DoD and other contracts for security, and 7.7% went to county, 2.8% went to not-for-profits, and then it gets much smaller after that with for-profit organizations and tribes. So with that, I'm going to ask a quick polling question here. And for the polling questions, if you could just respond with either A or B or true or false, which are representative of true or false. Polling question is the CARES Act and other federal funding provided in response to COVID-19 pandemic required to be monitored and passed through to other agencies? So question is it true or false? Is federal funding required to be monitored if passed through federal agencies? I'll give you a minute here to respond. All right, so I think those have come in. The answer to that question is true. There are no exemptions under the CARES Act or other programs if funds are passed through to subrecipients or vendors to be exempted from monitoring. So monitoring is required. I would say likely because these are new programs as a pass-through entity or a grantor, you would likely be considering these programs as higher risk to your organization. So with that, we'll roll right into subrecipient monitoring. I'm going to go through an overview of the monitoring process, talk a little bit about how to evaluate subrecipients versus vendors, look at effective risk assessment and what it means to develop a monitoring plan. So really the purpose of federal monitoring review is to evaluate the management and administration of the grant post-award. There is some pre-award stuff that occurs that is in the earlier parts of 2 CFR. But really we're looking at the post-award management related to the granting process. By doing by conducting monitoring throughout your grantees, It helps to ensure the quality of the program and services delivered, as well as the performance of the grant, and to determine whether or not it's in compliance with the agreement and achieves its objectives. So really, essentially, we break the monitoring process down into 4 areas: planning and risk assessment, pre-monitoring review, review and preparation, and then on-site or virtual site monitoring, which could include desk reviews, as well as reporting and closure. And really, if you go through each of these areas, planning and risk assessment is essentially, we would go through and identify the core programs and grants and activities and indicators to be reviewed. We would determine subrecipient locations or vendors that we would like to visit, or whether or not we're going to do a virtual site visit and do everything online, and look at any other areas of risk that might need further analysis. In step 2 or phase 2, that's where we do our request for documentation. We review those documents, we visit the sites, and we obtain the approval to move forward with that site monitoring with the pass-through agency. Our third step to this process is really, we hold a kickoff meeting. It includes both the pass-through agency as well as the subrecipient, or the vendor, if we're looking at a vendor contract in some cases. And in that meeting, we essentially agree on a work plan, communication, deliverables, key components of the review, as well as kind of success in getting through that monitoring. In addition, this is where we're going to be looking at the documentation and performing our testing. And last, gathering any evidence we need for any findings. And then we would conduct an exit meeting. Last, we issue a written monitoring report, draft form generally for the pass-through agency to review and issue to the sub. We do maintain a working file. We'll go through that later on the subsequent slide. And we work to resolve any non-compliance and get the corrective action plan in from the subrecipient or vendor. Again, all of this sounds pretty simple, but it does require strong knowledge of federal, state, and local requirements and policies related to the grants, and understanding of the uniform guidance and depth of understanding of the grant program itself. Really, what we're focused on here is essentially financial monitoring, but there is a programmatic side that occurs as well in monitoring, which includes eligibility determinations. Our firm is focused solely on the financial monitoring so far, but we could be engaged to look at eligibility and other criteria related to that grant in order to look at its performance, reporting, and compliance. So before you launch into a monitoring, is really to make sure you're looking at contracts correctly as to what is a subrecipient, as well as what is a vendor, and whether you've got a subrecipient or a vendor, because the requirements vary as to the grant itself. So when we look at a subrecipient, essentially it's defined as a non-federal entity that receives a sub-award from a pass-through entity to carry out a part of a federal program. It doesn't include the individual that's the beneficiary of such programs, such as homeless or victims or domestic violence or housing, et cetera, or even disaster recovery. The subrecipient may also be a non-federal entity that receives awards directly from the feds, as well as it could be various forms of, could be a nonprofit, it could be a tribal nation, and it also could be a commercial entity. So in looking at subrecipient versus vendor, a subrecipient really is, a subrecipient would determine who is eligible in most cases to receive federal financial assistance. However, I ran into a grant program recently where another agency makes the determination of who is eligible, and the city actually just distributes dollars. So it could be that even the subrecipient in that case isn't making those eligibility determinations. It's a third party. Second is subrecipient has its performance measured against whether the objectives of the federal program are met. A sub would have responsibility for programmatic decision-making and also needs to adhere to the applicable federal program compliance requirements and use federal funds to carry out the program of the organization as compared to providing goods and services for the program. A vendor, however, would provide goods and services essentially within its normal business operations as part of that grant. So you can think in terms of purchasing personal protective equipment. That would be more of a vendor relationship as opposed to a subrecipient because they can provide similar goods and services to many different purchasers. So think N95 masks, how many of those were purchased and were federal grant dollars used to purchase those? Or cleaning supplies and sanitation supplies under CARES environment. The other is a vendor operates in a competitive environment. Usually a subrecipient does not. And they provide goods and services that are ancillary to the operation of the federal program. And so they are not subject to necessarily the compliance requirements of the federal program. So before you move on, you really should be documenting your assessment as to whether or not they're a subrecipient or vendor each year, as well as any contract changes that could change that determination annually. So under 2 CFR, I'm going to refer to the 2 CFR section 332D. This is where the responsibility to manage subrecipients comes into play. And so those Code of Federal Regulations requires that we as pass-through entities monitor the activities of subrecipients as necessary to ensure that the sub-award is used for authorized purposes. So that means in compliance with federal statutes, regs, terms, and conditions. And the guidance says that the pass-through entity of the must monitor the subrecipient must include the following. So must means it will, it's a requirement. So you do need to review the financial and performance reports required by your agency of your sub. That is required as part of your grants management. You need to follow up and ensure that the subrecipient takes timely and appropriate action to cure deficiencies that have been found related to the federal award, either through your single audit, through your on-site review, written confirmation, highlights of status of actions planned or taken to address single audit findings related to the sub-award, as well as past monitorings. And then lastly, issue a management decision for applicable audit findings pertaining only to federal awards. And the pass-through entity is responsible for resolving audit findings specifically related to sub-award and is not responsible for resolving cross-cutting findings. So with that, the next part of our monitorings is that we try to conduct effective risk assessments in order to ensure that we are risk rating our agencies correctly. So I'm going to play a small web here, and we can look at one where things didn't go so well.
A scathing federal audit found waste and abuse of federal tax dollars in Nevada's hardest hit fund. And today, Contact 13 Chief Investigator Darcy Spears has more on the story she first broke last fall. A newly released report shows how much of our money was misspent. And Darcy asks, what's being done about it? That's supposed to help struggling homeowners pay their mortgage has been repeatedly identified as one of the most inefficient agencies in the federal relief program, keeping as much money as it gives out and only helping a fraction of homeowners in need.
The Special Inspector General for the Troubled Asset Relief Program originally said the Nevada Affordable Housing Assistance Corporation, or NAHAC, wasted $8.2 million tax dollars on things including perks for employees and a bonus for the boss. It took a year for the U.S. Treasury Department to review auditors' findings. Now they say only a fraction of that money was used for what they call unallowable administrative expenses. The nonprofit federally funded agency was asked to reimburse the hardest hit fund just over $82,000. That's only 1% of the $8.2 million SIGTARP says was wasted. Most of the improperly spent money was for legal fees associated with the Department of Labor investigation, but there was also $8,000 in personal car expenses for the CEO's Mercedes, $4,500 for his bonus, and nearly $13,000 for employee parties, outings, lunches, and gifts. NAHAC recently paid the money back and today issued the following statement. With this payment, we believe this investigation is closed and NAHAC can get back to tending to our mission to help Nevadans hardest hit by the downturn in the housing market. There are about $85 million left in Nevada's hardest hit fund and 4 years to get it all out to homeowners in need. The board and management at NAHAC during the time the money was misspent are all gone now. The state attorney general is still investigating whether any criminal acts were committed, and NAHAC's new board is still deciding whether it will be cost effective to hold individuals accountable. Darcy.
So essentially we can see, and this was actually a investigation not done as sub-recipient monitoring, but I bring this to light because we can clearly see that there are requirements in order to monitor to prevent these things from happening. And so as we're looking at our sub-recipients and contractors, we should be gathering pre-award data, both financial and non-financial, for those sub-recipients. And then we should also gather post-award data such as budgets, drawdown amounts and dates, reports, both financial and non-financial. As you can see, they were spending in areas in which they shouldn't have been spending. And we might see some of those reports in there. The other is any prior monitoring reports or other entity monitoring reports, clearinghouse data that may have been posted, and lastly, the prior year risk assessment if it's ongoing program. I think one of the what they said about this organization is that they were calling it a pervasive culture of waste and abuse, where millions of dollars from federal government that were supposed to help struggling Nevada homeowners keep their homes, again, this was during the last recession, instead went to pay for cars, holiday parties, employee bonuses, employee gifts, employee outings, staff lunches, and a number of other wasteful expenses. And their response after paying the $84,000 back was as follows. We are servants of the public and overseeing public funds for the public good. And as such, NAHAC's records and transactions shall be available for public scrutiny from this point forward. This is the new director in charge. This is her quote. More importantly, we are installing new financial oversight, operational standards, and methods of accountability to guard against waste, fraud, and abuse and earn back the trust of the state, the federal government, and the taxpayers. So again, your risk assessment should be contemplating these kinds of things as you're risk grading your agencies for monitoring. You're not going to know everything, but essentially you should kind of pick 6 to 12 risk characteristics that are important to ensure compliance, and things that are other than as required, like the single audit if they were spending more than $750,000. And this can come in many different forms. I think essentially try not to over-engineer it because you might be missing things along the way. Some examples of areas of risk are, is it a new recipient or a new award to that recipient? Think CARES Act, all of the funding that we just talked about. Those are all going to be new awards and new recipients. The other is results from the single audit, which we have as public information. lack of timely drawdown or reports or unusual amounts, failure to submit their reports timely, turnover in key personnel. You can also look at key personnel spending personally, look at, where they live, how they live potentially, or kinds of cars that they drive. Prior monitoring results, if they had findings in prior years, and how long since you last visited that site in person or did a desk review, and then any other prior audit results. All right. Let's go to the next slide. So there are several ways to risk rate this. I've seen some organizations use high, medium, and low. I've seen numerical rankings from 0 to 10, and I've seen color coding for risk rating. So again, whatever works for your organization or a combination of those. Some like the numerical ranking because they can weight those numerical rankings. And some, because some things may cause you to have a higher risk based on what's happening. So if you're failing to submit your reports timely, et cetera, those may be areas you want to focus on those entities as to what's going on. And then last is really to classify your subrecipients after risk assessment into essentially logical groups. And again, this risk assessment is a requirement. We talked about it earlier in the Code of Federal Regulations. As a pass-through entity, you need to be doing risk assessment. Now, I just played the clip on the fraud. You're not required to assess for fraud, but I did want to talk about fraud indicators and grants. And really that probably could be part of your risk assessment related to the organization, especially with everything going on with COVID-19 and working in remote environment. So, really thinking about the fraud triangle that Kenny went over in the last session, which is pressure, opportunity, and rationalization. I kind of broke this down into two, which is motivators and opportunity. And really the motivators are things such as rationalization or a belief that they aren't adequately compensated and or rewarded, or nobody will notice, those kinds of things. Having an expensive lifestyle, cars, trips, etc. Also having personal issues, addiction, debt, financial hardship, and divorce. Many people are suffering from financial hardship with 40 million unemployed. So we can only imagine, even though the employee that may be in charge of your grant program isn't having, you don't see is still employed, but possibly their family is going through hardship. Having high pressure to perform and deliver results. I can't imagine anybody saying right now in the pandemic that we don't all have pressures to perform and deliver results, but always there is, but there's a level of accountability that is appropriate, and then other pressures that are not. Conflicts of interest, related party transactions, and then also pressures to use or lose funding and grants that can cause problems. Opportunities to commit fraud in grants as management lacks attention to ethical values. We always talk about tone at the top, lacking good internal controls such as policies and procedures. Internal controls are extremely important and should be evaluated at least as part of your monitoring on your high-risk organizations. Having a lack of an appropriate level of segregation of duties. We talk about this often to prevent fraud. Authorization is one of those, and having authorization, recording, and reporting and approval separate. With the remote work environment, you have to be careful that your internal controls have not been compromised because of that remote work environment. Reconciliations, if you're not getting timely performed reconciliations or differences on those reconciliations, such as bank reconciliations, are not being investigated. And then just lack of awareness of laws and regulations. People, and there's turnover in organizations, and training budgets are probably limited currently. So ensuring that there is adequate training for administration of the grant programs, especially with as many new ones as we just saw hit in the last few slides. So as we talk about CARES Act, you can see Stonecrest City Hall here in the link. This just came out April 15th, a week ago. And they completed an investigation of the CARES Act Relief Grant Program distributions and found significant problems with the distribution of those funds. This was conducted through their city attorney's office. It wasn't a sub-recipient monitoring, but somehow they hired a forensic accountant, paralegals to take a look at this and built an investigative team. So similar where things have started to go wrong. And that report findings state that the program created to administer and distribute the CARES Act fund was plagued by mismanagement and serious departures from applicable legal standards and GAAP, generally accepted accounting protocols or principles. And the report states that some of the mismanagement found includes conflicts of interest, which I brought up on the prior screen, a scheme where city staff and officials instructed their grant recipients to send a portion of the funds they received to a third-party corporate entity. So there was collusion there and kickbacks and inconsistency and other schemes that may indicate criminal behavior. So though I'd like to think CARES Act, we're not seeing these already. We are already starting to see them come through. Next slide is really just giving you some examples of the types of risk assessment that can be done. You can see in this first one, they said if there's an A133 audit or audit under uniform guidance, if they have that done, they're automatically low risk. I don't know if I've done that. Would do that, but this is a large university, so they have so many recipients that they do classify it that way. And they say no, if it isn't a single audit, then they go into other mechanisms of other financial audits and policies and try to rely on those. And you can see that they're adding additional terms to their agreement as a result of the failure to have or lack of requirement for a single audit. And then if they don't have any other audits performed, then they go into kind of the high risk bucket. And there they add additional terms, including training and some other things, as well as doing desk reviews for that grant. Now, here's another example, sub-recipient monitoring, and this one uses a risk score and a weight. We talked about a weighting, and you can see they go through the type, whether they're new, how much the award was, if there was matching, how many times they requested adjustments to their budget during the year, financial reports, timely or untimely, progress reports, timely, untimely, single audit, whether it's been qualified, and then whether they have program income, any kind of conference costs, equipment, etc., and grant training. And then last is another one, a little simpler. Again, this one uses a weighting and a score of assessment low, moderate, and high, and a weighted score. But you can see this is two categories of low to high, but I'm assuming that they get somewhere in there in the middle. I would consider you could break that into moderate. But you can see here, this was various funding levels, prior experience working with them, whether it was a grant or contract, sorry, that's typo there, whether they had a single audit done, compliance with any kind of disposition of humans, animals, DNA, etc. Again, this is a college university and is really focused on research grants, but you get the idea here, whether or not they have procurement systems in place, et cetera. So again, 3 different types of examples. It doesn't have to be this elaborate. It can be simpler, but these are just some for you to contemplate and consider in your own operations. So last is developing your monitoring plan. Essentially, it's really critical for you to differentiate your approach to each group because it can be costly to monitor the same across your sub-recipients. And so really breaking these into a high or a moderate or low risk group is important from a cost benefit perspective. And really the key is to differentiate the extent of monitoring at each of those risk rated groups. So, your low risk group is probably a desk review. Your moderates are likely have some type of rotational program within them, depending upon whether they have prior findings. And then your high risk group is ones that are so large or so significant to your program execution that you probably want to do a full monitoring of them. So we're going to launch right into the sub-recipient monitoring, and this part of this presentation is going to focus on financial testing procedures. We're not going to go into the programmatic side. Since most of us are auditors, we're looking at the financial side, but if we do need to have a separate discussion on programmatic testing, such as eligibility, please message me and I can get in contact with you for that. And looking at financial testing procedures, we're going to talk about planning procedures, general procedures, conducting a site visit, and the types of document requests that might be made, as well as some example financial testing procedures. These won't be all inclusive, but they will show you some of the main ones that we use in our practice in order to do sub-recipient monitoring. So let's talk planning procedures. The first thing is to have a planning meeting with your pass-through agency, or with the pass-through agency. You should have one if you've outsourced your sub-recipient monitoring, or with your department and that is going to be conducting the monitoring, to talk about scheduling, types of procedures to be performed, the sample period selection, the size of samples, documentation, sending out notices, or we call them pre-monitoring letters, and we also send a questionnaire related to internal controls and policies and procedures, and as well as our request lists. The other is to obtain a copy of the subrecipient contract, or if it's an award letter with the pass-through agency, any amendments that may have happened, or budget amendments for the monitoring period in question, as well as if it's a vendor contract. Take a look at any prior year monitoring for findings and observation, and then obtain copies of the sub's response to those findings to see what the status is, as well as the implementation that may have happened in a subsequent period. Again, we're going to say communicate quite a bit, because that's probably the most important thing, which is to hold that opening interview with the subrecipient and pass-through agency personnel. We typically sit down with both the sub and the pass-through agency together and go through the questionnaire at our entrance conference, just to ensure everybody's on the same page and understanding of what is going to be required. We address any issues or concerns with any responses to that questionnaire if they've said no. We typically at this entrance conference get a copy of the accounting policies and procedures, chart of accounts, org charts, check signers, cost allocation plans for indirect costs or direct cost charging as they relate to processing that award. And then we obtain electronic versions of QuickBooks or Excel files or grant downloads from the general ledger for each program, so that we can reconcile those back to any requests for funds or supporting documentation for reimbursement of expenditures. So conducting a site visit, I'm going to say, do you really need to be on site to do the monitorings? And we used to, in the early days, call site monitorings or site visits, as well as desk reviews. And desk reviews I find are less extensive than a site visit. But with COVID-19, we have been conducting all of our site visits electronically via either Zoom or with our file sharing system. So we have not been on site, but we do anticipate that we're going to be going back to somewhat of a hybrid method in the future. So think about that in terms of what you're able to do prior to your visit. and take advantage of technology and the types of requests, standardization of your requests of the subs. And that is helpful in order to do some of this work virtually. There should be a team meeting prior to the visit. And if it's being done internally, coordinating with other departments when practical, if they have eligibility information, if you're going to do the programmatic side. Phone meeting just to talk about general logistics, either with the sub or with the pass-through entity. Hold an entrance meeting is very important on the first day when testing is going to begin, to make sure you have everything. And then also identify a liaison at the subrecipient as a point of contact. We find this is helpful to keep the monitoring moving smoothly through the process. So types of documentation requests, there's many, but I can kind of break these down based on program funds that have been used or expended. Essentially, you're going to need general ledger and bank statements for the period under review, and it may be a shorter period than a fiscal year. It could be every 6 months, could be quarterly. It depends on how you want to conduct your monitoring. Any invoices for large capital purchases that might be selected. We often see gift cards or gas card records or bus passes, records to support those kinds of spending, that kind of spending within the program. Again, it depends on the type of program you're monitoring. Basic organization information, and I always find it helpful to get IT system information in case there's systems that communicate and are used and interfaced in order to administer the program. That should be identified in your pre-award documents. Financial policies and procedures, this would be overall financial policy and procedures, and then any that are grant specific if they have them. Payroll records and supporting HR files. And then again, last but not least is invoices as support and payment records for expenditures incurred. All right, so that's the bulk of the documents you're going to need. We do recommend a healthy mix of procedures over internal controls and testing of transaction and attribute testing. Also, you should be considering non-financial measures as well as financial ones. So program participants is often something that could give you an indicator of how many people you may have served. Those kinds of qualitative and quantitative information can be used analytically to help look at the expenditures. Limit your duplication of what may have already been done as part of the independent audit. So you don't want to retest necessarily internal controls if they've already got opinions on them in their single audit. So you can limit how much you do on internal controls if they don't have any significant deficiencies that they've reported previously or material weaknesses. I would say give daily updates to the subrecipient, as well as you should have periodic updates with the pass-through entity on progress. Recommendation is to develop draft report in the field. If you can't get to the report in the field, is to essentially have the findings done so that you've at least vetted them enough with your team to ensure you want to report those. Hold an exit briefing, including a timeline for issuance of the report. Generally, we recommend about 21 days. Any open items that are remaining to complete and resolve any findings, and the timeline for them to produce those so that those are timely and don't hold up the final report. Next, we'll go through some financial kind of standard tests that we perform when we're doing sub-recipient monitoring. So one is we usually get the contract, and we call it contractor because you could make the sub-recipient, but we're doing, in most of our cases, we're doing both sub-recipients as well as vendors. So we just label it contractor request for funds and monthly expense summary report by natural category. So that is your grant expenditure detail report. and then your personnel cost allocation plan. We generally will pick 2 sample months, depending upon how long the period is. Oftentimes we have a 6-month period we're monitoring, so we'll pick 2 within the 6 month and we will reconcile those. So we trace those totals by category to the source documents, like GL to AP or payroll summary data. And then we select category samples from the GL and trace monthly expenditure amounts to the original source documents. So we will look at things on procurement and cash disbursements, that the expenditures appear to be appropriate use of those funds, that it was properly authorized, and we verify expenditures were posted to the appropriate account fund programs. We continue, we look at that the amount paid agrees to the invoice or the supporting documentation. We verify the amount billed to the pass-through agency agrees to an allocation table or other support. So you could have a pass-through. Verify the check was signed by appropriate personnel if the signed copy is available. And then trace the check to the bank statement and verified it was cleared and was not voided. If it is voided and they claimed that expenditure on their cost claim and they voided it, there should be an adjustment in a subsequent month. And if there is not an adjustment in a subsequent month, then possibly they have over-claimed for reimbursement. For payroll, we verify a sample of paychecks from the general ledger and we agree those to the payroll register. Again, do the same, verify amounts billed to the pass-through agency, agree to their allocation table or other support for that. And then we go into detailed attribute testing on those payroll checks, ensuring that they were signed by the appropriate personnel. We trace it to the bank again to see that it was cleared and not voided. Look at pay rate and that was authorized in writing, and their position was budgeted at that rate. We verify all the tax forms are complete so that we look for authorized employees. Verify timesheets are authorized by employees and approved by their supervisor. Look at hours if they're hourly, and look at gross pay and make sure that that, as well as any related benefits charged to the grant, are accurate. Next phase, we obtain copies of checks received for contractor requests for funds. We do this for 2 months. This is on the cash receipt side. We ensure that the sub-recipient, that the amount agrees to their request. And we trace the amount from the warrant to the check received, make sure that matches the deposit slip, and we see that that goes into their bank account and is intact and timely. We obtain a copy of the bank recs, make sure they are timely reconciled, and we look for suspicious and stale dated outstanding checks. Reason being, as a stale dated check could be charged for reimbursement to the grant, but not be clearing, and be an indicator of potential fraud or lapping or kiting. Last is write up exceptions noted on matters for further consideration. So next, we're going to look at common cost categories, wages, benefits, professional services, compensation and personnel costs, which are generally the largest amounts being charged in most cases to grants, as well as direct allocation. Talk about budgetary comparison a little bit on indirect cost. So when we talk about individual cost items, wages, benefits, professional services, and other non-payroll cost categories, I broke these down into, we usually break our testing down between payroll and related costs and non-payroll costs. And so you can see here, I provided a chart of the code section of the CFR that applies. In this case is section 75.430, which is compensation for personal services, compensation for fringe benefits, employee health and welfare costs, recruiting, relocation, training, education, and travel. And then non-payroll cost categories such as conferences, entertainment, goods or services, professional services. And again, these are just areas in which you may run into, these are the majority of the areas in which we run into costs being charged to grants. So you should familiarize yourself with the code sections that govern those cost principles in the CFR. So when we talk about compensation and personnel costs, the purpose of CFR section 200.430 was to reduce the administrative burden of documenting time and effort as compared to prior language. So there is new language under the uniform guidance that has been provided. Again, this uniform guidance made it more principles based, meaning they removed a lot of the old A21 examples that were in there and just talked about principles of compensation and personnel costs. And again, this was less prescriptive on documentation and again, placed more emphasis on internal controls over personnel related costs. So our testing of internal controls can be beefed up over payroll and less on the attribute testing. But again, it still requires that charges must be based on records that accurately reflect the work performed on the grant. And there are requirements for obtaining those such records. And so standards for documentation of personnel expenses has been basically defined within it is that it should be supported by a system of internal control, which provides reasonable assurance that charges are accurate, allowable, and properly allocated. And it should reasonably reflect the total activity for which the employee is compensated by the sub-recipient or the non-federal entity. And it should not exceed 100% of compensated activities. It should comply with established accounting policies and practices of the non-federal entity. So again, we've asked for policies and procedures in our request for documentation. We should compare it to that and ensure that it complies. And we should also have a supported distribution of the employee's salary wages among specific activities or cost objectives, specifically if the employee works on more than one federal award, a federal award or a non-federal award, and an indirect cost activity and a direct cost activity, or two or more indirect activities, which are allocated using different allocation bases. Or potentially they were on an allowable activity and on a allowed direct or indirect cost activity. So again, the uniform guidance is not as prescriptive and is really focusing on the standards of documentation and how you're supporting those. So when we talk about direct allocation or allocation of joint costs amongst different programs or bases, is really that the base that is used in which to allocate those costs accurately measures the benefits provided to each federal award or other activity. So there has to be a nexus between the allocation and the benefits obtained. Those allocation bases must be established in accordance with reasonable criteria and supported by current data. So you don't want to be using outdated methods for allocating. And really this takes some level of analysis on the monitor's part to ensure that they understand the base in which they're allocated. It can't just be somebody said so. There has to be support for the assumptions used to allocate. Often we see budgetary comparisons as one of those measures. And again, budgets are great, but those are estimates. And there can be changes with COVID-19, for example, things are changing pretty rapidly. So people are bouncing from one thing to another. So there should be reasonable estimates of those and timely recording of significant changes. Last, there should be a process in place to ensure that you're reviewing interim charges if they were based on budget to after the fact analysis and time, and make adjustments to ensure final changes are accurate allowable and properly allocated. There's too much to go into detail on indirect costs, but some agencies are going to have a negotiated indirect cost rate agreement, or if not an indirect cost rate agreement, a de minimis rate. There are several sections of Appendix 3 through 9 that govern indirect costs, as well as specific cost allocation plans. I've highlighted indirect costs F&A for nonprofit and for state and local government in here. But I just provide these for reference. Essentially, if you're going to be negotiating indirect cost rate, it would be with your cognizant agent, and often we're seeing a provisional rate and then a final rate come back after the fact. But you can charge that provisional rate up until the time at which the final rate is approved. We talked about cognizant agency. This was clarified in the CFRs that a cognizant agent for indirect costs means a federal agency responsible for reviewing, negotiating, and approving cost allocation plans or indirect cost proposals on behalf of all federal agencies. Often we see Department DHHS is the approver of costs, but it could be CDBG, HUD, for example. So anyway, for assignment of the cognizant agents, you would want to look at these appendices to Part 75, and you can find who is the listed cognizant agent. And if you don't know, you can always ask the awarding agency. Last is the use of a de minimis indirect cost rate. This is available. It's 10% rate of modified total direct costs. It's available to all non-federal entities that have never received a negotiated indirect cost rate. So if you've had an indirect cost rate negotiated in the past, it's not available. But again, if you have not, then it's 10% of modified total direct costs, which is direct salaries, wages, fringe, materials, supplies, services, travel, and the first 25,000 of each sub-award. So if you're a sub-recipient and you're passing through to other not-for-profits, it'd be the first 10% of the first 25 of that. Costs must be consistently treated as either direct or indirect, and you see that's on direct costs. And then once elected, if you've elected the de minimis indirect rate, it must be used consistently until you choose to negotiate for a rate. And then at that point, you cannot use the de minimis rate in the future. So next, I'm going to give you an overview of what a monitoring subrecipient file looks like. The pass-through agency monitoring file, again, this is our files as the Poon Group, where we are hired as the outsourced monitorer for an agency that is passing through federal money. It could look different if you looked at someone else's work papers, but we're going to give you ours as an example. It's not everything, but it will give you a good idea of what should be in there. We'll talk a little bit about desk audits, finalizing the grant and closeout, and then any matters for further consideration as part of that monitoring file. So this is really, all of our working papers are electronic when we are working on monitoring a specific agency. And so this is our overview. We're hired as a city monitorer, and we're monitoring subrecipients, which typically are either other non-federal entities, including not-for-profit. So you can see our file is set up this way. We have essentially our fiscal monitoring report and response, which includes the corrective action in section A. In section B is where we include all of our notification letters, where we're compiling our information and sending those out timely in advance of the site monitoring, whether it's a site visit or a desk review. Next is section C, where we're documenting that we've held both an entrance and an exit conference with the subrecipient or vendor to ensure that we've got that documented and who the parties were that attended those meetings and what was discussed. D is our monitoring questionnaire. E is our monitoring procedures, is really our work program. And then F through K is our working papers, which I'll show you on the next slide in more detail. Section L is our matters for consideration, or what we would call preliminary findings. We haven't made a final determination on whether it's an observation or a finding, but that's where we log and track things that come up during the review. And then other documents are things like we talked about earlier: policies, procedures, chart of accounts, etc. So this shows our pass-through agency working papers, section F through K. And you can see here where we've got our reconciliation of our expenses and our general ledger download in section F. Under section 8 is our test of disbursements. And you can see we are using compliance sampling forms here for that. The next section, I, is payroll testing, and we're doing this based on each contract that they have. So, so they essentially have a youth and a youth build contract under WIOA. The next section is we test bank reconciliations. And then the last is we test the cash receipts, test of the monies received, and how much that was, and we trace it to copies of the checks that we talked about previously. Again, this is just an example. It's not all encompassing, and it can change based on the entity being monitored. So again, those are extensive on-site visit working papers. You could see that you could use that even if you did a desk review. You could gather all documents that have already been provided to you, and anything else that they need to provide based on your consideration of risk. And maybe you only focus on one or a few areas. And then consider conducting these risk assessments throughout the year as drawdowns are happening and reports are made. That way you can communicate any issues identified in writing throughout the year and develop a report just like you would for a full site visit. Okay. So once you're monitoring, you've received everything you need to in order to complete your file. And usually we have our files reviewed by a manager or a partner after the work is being conducted, and the final report is done. One, we have to contemplate communicating those findings, the process for reporting those results, and ensure that we are developing elements of a good finding for the client. I think that's sub-recipient or the pass-through entity. That's usually the hardest part, is ensuring that it's accurately written with appropriate information. I'll show you an example of a monitoring report and some findings, and then as well what the elements of a good corrective action plan from the sub-recipient should look like. So when we consider the purpose of communicating findings, I mean, essentially as a pass-through agency, your goal is to ensure that you've complied. You can't delegate that responsibility to the agency that's fulfilling your award. You actually are responsible as the awarding agency to evaluate any recurring problems and ensure that you've corrected those either through additional training, or if you are have identified a problematic subrecipient or vendor, that you contemplate whether or not you need to potentially cancel that contract and save the remaining funds to be awarded to somebody and that can be a proper steward over those funds. Second is opportunities to better monitor funds and program performance to ensure timely deliverables in your program. We are focusing on this presentation on the financial side. Program performance means ensuring that the individuals that need to be served are getting served and you're reaching that population. So there are other measures if we were to talk about programmatic performance here that I have not addressed, which would be subject to, I could talk with you separately about that. Last is updates to policy and procedure for oversight or at the subrecipient. So if they haven't updated their policies and procedures to correctly track funds, that you're inserting yourself into that process to ensure that the policies and procedures that you're carrying out are also consistent with what they're carrying out. And then updates to the pre-award process for due diligence when making future awards. So if you're finding findings that are impacting your decision-making process on who you would award to in the future, based on things, non-compliance, that you ensure that you incorporate that into that pre-award process in that due diligence. So next is, I'm going to talk about the process for reporting results of the monitoring. This really is a back and forth process, but because there are 3 parties generally in our case that are involved, it's a little more complicated because we're really an outsourced arm for a pass-through entity. And so we're ensuring that we're communicating to all parties. So it takes a little extra work. It's probably not as much if you were doing the monitoring yourself, but I think this outline will lay out a good process, whether or not you do it internally or you've hired this out. Let's see here. It's not letting me do my bullets. Let's see. Hold on 1 second. Okay, so the process for reporting the results really, in all cases, starts with reviewing those results of the monitoring with the agency oversight personnel. That would include the pass-through agency as well as with the subrecipient. And essentially, you want to make sure that they both are aware before you get to the exit conference so that there are no surprises. Nobody tends to like surprises. So if you are doing daily updates or at least weekly updates, they will know that these things are going to come up through the process. Next is to hold that formal exit conference with both pass-through agency and subrecipient personnel available. I think it's important. We do this as a third party to the pass-through agency, but if you're the pass-through agency, obviously you'll hold it together. So a little different, but since we're the outsourced, we usually coordinate and schedule that with both of them available. Third is to do a file review, cross-reference all work papers and monitoring documents. We ensure that our working papers are all signed off and reviewed before we do any kind of scanning or uploading to our pass-through agency clients. We will generally draft the report of any observations and findings on behalf of that pass-through agency, ideally within 21 days of completion of the site visit, or in case of desk review, if we found anything on the desk review. Usually those are lower risk, so we often don't have findings there. Last, we submit a final report to the grantor, pass-through agency, and subrecipient for approval, as well as development of a corrective action plan by the subrecipient. Ideally, we try to give at least 2 weeks time frame for them to submit their corrective action plan. What we often find happens is once things are in writing and delivered as either an observation or a finding to the subrecipient, that they're able to come up with additional documentation. We do look at that documentation to ensure that it was contemporaneous when the event or expenditure took place and not created after the fact. We've had that happen a couple times. And so just be aware, if you're giving them 14 days, there is no element of surprise in the sampling at that point. Last is we obtain final letters that we draft the report. And so the final letter actually will go out on the pass-through agency letterhead. And the corrective action plan will usually come back in on the subrecipient or vendor's letterhead. We usually get those final letters and scan those into our electronic working paper file. So we have a complete record of final decisions on those findings and time frame. And then we provide a final electronic version of all of those reports and all the monitoring documents and working papers to the pass-through agency. So that's the general flow from end of field work, site visit work, to completion of the file. So last is elements of a good finding. Under the uniform guidance, as well as yellow book, there is generally findings are defined to have certain elements of a finding. Because this is sub-recipient monitoring, it's quite a bit looser on what you can do in terms of writing a finding, but we often have our staff complete all these elements in the file so that we know that it's well thought through. We don't necessarily present them in this way to the pass-through agency or the subrecipient. We do a more shortened version, but we do anticipate that we have these kinds of criteria included in the finding and before we get to that exit conference. So essentially we define the condition, which is really describing the problem that existed, the cause, which is explaining why it exists, the criteria that applies, meaning specify the applicable regulation, policy, or the terms and conditions of the grant award that may have been either violated or not complied with. The next is effect, and if you were in a yellow book, you'd have question costs separately, but essentially the impact of the finding, what is the effect of that finding, including any question costs, and sometimes that's just non-compliance, right? The effect is you're not in compliance with the federal terms of your award. And then last is a level of recommendation, including recommendations on possible corrective action to be contemplated by the subrecipient. Sometimes that action might include training. Sometimes it might include modifying systems or developing reports or reconciling, but it could be anything in that regard. So that is what we would consider elements of a good finding, and including those in the working papers to ensure you've thought through that. Next is a sample of a monitoring report. And as you can see, we included in this case, well, they had 10 findings and they had one observation. And you can see we differentiate between observations and findings. Observations are things that we want to bring to your attention that should probably be corrected, so that we won't have issues in the future, or it could result in a finding at a later date if you don't fix it after this first go around. And then a finding is something where there is a non-compliance that is pretty significant. So you can see in this case, they were missing requested monitoring docs, which was their old youth budget, their cost allocation plan, their financial and single audit, as well as updated employee accounting manuals. I anticipate I didn't share all 10 findings, but there was more in terms of costing that was provided, but you can really see we write this as just an observation and a recommendation. So finding, recommendation. The second finding is late submission of requests for funds. And you can see we looked at the due dates on these, and we actually provided the funding terms and conditions, which actually had the reporting requirements in it from this agency. And the recommendation is pretty simple, that they needed to adequately and timely prepare their submission of the request for funds. Next slide is really what we've run into is essentially probably the most common findings related to our monitorings. Incorrect payroll calculations, invoices weren't reviewed and approved, late submission of reports, whether it's for reimbursement or performance reports or cost reports, missing supporting documentation, payroll is missing time and effort reports, payroll was not reviewed and approved. They had single audit findings that didn't get contemplated, stale dated checks, which we talked about earlier, or timesheets didn't agree with the payroll register. The other side, you got access to records and financial statements as necessary, meaning we were not allowed to look at anything. Accrued PTO calc and reserve set aside. We've had issues in that regard that accrued PTO has been charged to the grant. But in cases of where accrued PTO is being charged, that means that you've been collecting federal money that should be reserved and set aside to liquidate those PTO balances at a later date. Advance payment of grant expenses for programmatic income. Amount of requests for reimbursement didn't match the support in total, and auto allowance, reasonableness of auto allowance, we've run into that. And then lack of bank reconciliations or errors on bank reconciliations. So those are common findings as we go through our monitorings. Corrected action plan to be prepared by the subrecipient or the vendor is really specifically addressing the finding and what action they're going to take to remedy the problem. Establishing a point person responsible for that and time frame for remediation. And then it says relentlessly follow up on the status of the findings to ensure that they have been resolved. And you'll hear why in the next section. So quick polling question. If your findings or your observations include a question cost, is a question cost subject to disallowance when it is a violation of law, regulation, and subaward terms and conditions? Answer A in your chat feature or B in your chat feature. A, it is subject to disallowance if it's a violation, or B, false, it's not a disallowed cost when it's a violation. I'll give you a couple of minutes here, or a minute. Go ahead and load those into the chat and we will monitor this on the side. I think the majority of you are going to get this right, which is yes, A, true. A question cost is subject to disallowance by the pass-through agency when it's a violation of law, reg, or the subaward terms and conditions, which means that the pass-through agency may request for the funds to be returned to the pass-through agency. And then again, if they've claimed that from the feds, they need to adjust their federal program as well. So with that, we are going to move to grant closeout. I'm not going to spend a ton of time here because that generally isn't really the focus of the monitoring, although grant closeout is part of the post-award management. In the finalizing of the closeout, though, what the consideration is that grants must be closed after the date of completion of an award in accordance with the regulations. So when you're looking at your expenditures incurred, ensuring that your expenditures were incurred prior to the award period, as well as any extensions that may have been granted, is important to note. As well, all financial and performance reports required as a condition of receiving that grant have to be submitted. So before you close out that grant, all those required reports need to be submitted and included in the grantee's file or subrecipient's file. Because we're talking about monitoring and because you may have had findings related to subrecipients or contractors, any past monitoring or audit findings, whether they came up in this audit or monitoring or in a single audit, those must be resolved even after you've closed the subaward, which includes question costs. And those determinations would be made generally on a case-by-case basis. But you do need to track to ensure that even though the subaward is closed, if there is something that's going to impact it substantially, you need to get those resolved. Close out of the grant itself doesn't relieve you of that responsibility. So if there were problems related to that grant, you're going to need to ensure that that happens. So what does that mean? You want to start your closeout early before the end of the grant award so that you have time for remedy, and trying to conduct your procedures throughout the final year so that you're not up against the deadline and pushed to the limit. Communicating any issues identified early on that closeout is important as well, and providing a draft closeout report for review and comment to the subrecipient. Issue that report. And then I think finally is to remove any unobligated funds from the federal system on the drawdown. So with that, that's kind of the full cycle. It is the full cycle of monitoring a grant. We're going to move into additional resources that are available to you. I've got several listed here. Of course, the uniform admin requirement, cost principle, and audit requirements is extensive. There was a frequently asked questions for that that was published by COFAR OMB. If you click on that link, I think on the COFAR website, Council on Financial Assistance Reform, that is all going to link you to the CFO. But the other sites are the American Institute of Certified Public Accountants, Government Accounting Quality Center website has information. The PRAC, which is the Pandemic Oversight Committee. You saw the slides on data of federal funding. That has a lot of information that's useful. Thompson Grants, you saw some logos in there. They publish techniques for monitoring federal subawards. A 5th edition is available. I don't remember the cost on it. I think it's like $100 or something. Definitely worth getting if you are giving out grants. And then last but not least is accountants and consultants familiar with federal granting. Jack and I are available to you. That is our email addresses as well as our phone numbers to reach us in case you have questions specific to your agency. And with that, it's really a big thank you to all of you for your attention for the last hour and a half. I know it's the end of the day. If there are any further questions that you have because of the material as presented, or that you're thinking about your organization as you've sat through here, feel free to put those questions in the chat, and we're going to monitor that here for the next few minutes until we end the session.